Hello and welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Mathew. And for the next 30 minutes, we'll take all your stock-related questions. You can write to us on any of our social media channels or through the YouTube live chat. You can also write to us on the WhatsApp number that'll be flashing on your screen. Now, let me introduce you to the guests for today. We have with us Mr. Gaurang Shah of Geojit Financial Services and Soni Patnaik of JM Financial Services. Welcome to both of you and thank you for taking the time out. Now, before we get into the questions and even the focus, let's take a quick look at the markets. Alex, how are the markets faring this morning?
It's a lot of chop and churn. Good morning to you, Smriti, as well as to everybody else, and as well as Gaurang and Soni. Thanks so much for taking the time. Let's take a look at the benchmark index, and it's trading with gains of about 1/3% and about 80 points shy of the 22,000 mark. It's currently trading with gains just about 1/3% and off the high point of the day. Remember, you've seen a very dramatic surge in equity markets on Friday, and we're yet to reclaim the all-time high that was hit intraday on Friday. The broader markets as well, let's take a look at where they are, and in fact, they're doing better off than the benchmark indices at least. You have the mid-cap 150 index that's gaining about 0.7%, and you have the 250 small cap 250 index that is up as much as 0.7% as well. Among the key movers then you have the auto index that is up about 1.8%, and we'll talk about one of the primary reasons why. But you also have pharma that's outperforming, and energy index is also doing well in trade today. Realty is up about 1.4% as well. So by and large, the market breadth seems to be tilted in favor of the advances in trade today. But let's talk about Tata Motors, which has to be the focus of the day. And I mean, look at the headline numbers. Revenue is up about 25% on a consolidated basis. The EBITDA is up about 60%. The margins have improved quite substantially. But if you look at within the consolidated numbers and you focus on Jaguar Land Rover, that really is where the story is this time around, because the EBITDA margin for Jaguar Land Rover is expanded as much as 410 basis points. And the top line number has grown by as much as 22%. The PBT is up quite substantially as well. And the EBIT margin is up as much as 510 basis points. According to all of the signs that are visible right now, Jaguar Land Rover has not just turned around, but it now seems to be heading for the takeoff zone of the runway. Gaurang, is that your view as well? And how would you look at Tata Motors from this point? Is it still a buy at this level?
Thank you, Alex, for having me on the show, and morning to all of you also. This is one stock that has been on our radar for a pretty long period of time. All bets were against Tata Motors when it came to auto sector as a performance or an investment idea, given the overhang. And one of the biggest overhang, Alex, was the business which has actually turned around, has started to contribute to do much better, and that is JLR, Jaguar Land Rover. We were always of that belief that there is tremendous amount of potential in terms of domestic brand Tata Motor vehicles that we see, as well as high-end premium brand like JLR. It was only a matter of time with the right business strategy, right product mix, right launches, and scalability. All this augured extremely well. And I think the stock is where it is today, running 7% higher, somewhere close to about 940. Your question whether it has the potential to do more, we definitely believe so. The reason why we believe so is that one of the biggest triggers that will happen in the near future is going to be debt-free balance sheet. That's what the management has spoken about over the last couple of quarters. So our interest is going to be primarily to see those green shoots of the balance sheet becoming debt-free. And that itself will be a big trigger, Alex. So you want to have brands and all that, product verticals, product mix contributing extremely well. But debt-free balance sheet will be a huge trigger. So we still maintain a buy call on Tata Motors from a long-term point of view.
Any trigger that you, or rather any target that you have? Have you revised your target upwards?
We did so, but Alex, the stock is up 7%.
Yeah, that's why I'm
running away at about 60 guys. So it's become very close. 1050 was the levels that we had thought of, but the stock has surprised us quite positively after it opened for trade this morning.
Well, right. The stock has most of brokerages remain positive on the stock, and it's not just after the results. This has been the case even before. But let's quickly dive into the questions. The first one is from Viru Parashar. He's talking about NHPC. They want to buy the stock, and from what I can see, the stock has given over. It's been a multi-bagger in the last 6 months itself. Now he wants to know if this is the right time to get into the stock. Soni, Soni, what would you suggest? Should you buy the stock at these levels, or should you wait a little bit for maybe a correction?
And good morning, Smriti. Thank you so much for having me on the show. Talking about NHPC, it is wise if you can buy it on a dip. I think the structure on the technical charts is looking quite strong for the stock. However, if there's any sort of a dip of about 2 to 3% on short-term trading perspective, one can enter in that range. There seems to be multiple support in the range of 105 to 103. So the closer that you buy to the support levels would be a wise decision, as the risk reward can be favorable back then. So try to accumulate in the range of 110 to 107. That can be a buying range, and reinitiate the longs, keeping a stop loss of 103. And then you can see it going back again to 116, 120 odd levels. I think that should be the strategy for now.
Okay, interesting. We've got a viewer, Srinivas, that's asking about renewable energy plays. Gaurang, we've seen some of the names, particularly with regard to the rooftop solar program that the government spoke about, or rather the finance minister spoke about during her interim budget presentation. Would you like any of these stocks at this juncture?
Oh, we have a couple of coverages in the power generation, and after the government's focus and policy changes, Alex, most of these conventional power generating companies have gathered their business act together and have done quite a decent amount of groundwork in terms of scalability and venturing into either green power, as we call it, solar or wind. One or two companies that we are positive on. One is Tata Power. This company, Alex, has done huge amount of investment into solar energy, and they have expanded themselves in states like Rajasthan, Punjab, UP, Haryana, Bihar, etc., including some other states. So Tata Power is one, and of course stock is, I think, virtually that's an all-time high, but we are still optimistic about this particular company. And the second one is the government play in NTPC. This company is also going into big way into solar, green energy, etc. So if you're really looking at long-term time horizon with this theme in mind, then I think Tata Power and NTPC could be the two ideas.
All right. They also want to know about Alok Industries, but let's take a short-term view on this. They've already bought in the stock at 37 levels. Soni, how does it look on the charts?
I think, Smriti, it's looking quite decent from current levels if you see, and it's trying to hold above the day low. So as long as, the day low is not breaking, I think one can continue to hold. On a medium-term perspective, the stock is quite good. It can give you a good movement above almost about, 10 to 12% on a medium perspective. So just hold the stock for a medium perspective. On a short-term perspective, I think you can just look forward to keeping a stop loss around at 29 or something.
Got it. We've got a question coming from Rajesh Maheshwari. He's asking about Indigo, and the company's come out with its results. He's bought at an average price of 2396, and so he's making some money. The stock, of course, is up as much as 3% on the back of quite a stellar set of numbers, Gaurang, in the third quarter. It seems to be solidifying its market share in the domestic sector as a whole, and it also there are some reports that suggest that it's contemplating a business class strategy as well. That's a deviation from what it's done so far. What do you make of that, and would you be a holder of Indigo for the long term?
Well, so this is one stock in the aviation pack, Alex. When the IPO was there, we came out with an IPO note at that point of time, advising a subscribed. Post the opportunities and the numbers that Interglobe Aviation reported, we again came out with a standalone fundamental buy recommendation. And my sense, Alex, is, honestly, Alex, last week I was traveling to Kolkata, and in both the airports, Kolkata airport and Mumbai airport. Just looking at the passengers that were flying, who said COVID was just sometime back? That's the kind of crowd that was there. So opportunity is definitely there. And my sense is that with the new aircraft addition, fleet addition, that is, Alex, that Interglobe Aviation is planning to do, they will definitely command a decent amount of market share. The realizations will be good. The only small hitch that I see is the number of aircrafts that are grounded because of the Pleth and Whitney engines and the inability of Pleth and Whitney engines to rectify that particular technical issue that is there. That's the only short-term overhang. Otherwise, we remain extremely positive.
All right. Next one, we're talking about data patterns. This one's from Rakesh Arora. And he says he's bought the stock at an average price of 1,500. He wants a long-term view on that. Gaurang, is this in your coverage?
Smriti, I'll give it a pass. Honestly, we don't have a coverage, so I won't be able to.
All right. Then, Soni, how does data patterns look? And since I've already bought in the shares, it's around 1,500. This share is currently around 1,900 levels, or in fact reaching there.
I think, Smriti, you can just trail the stop loss to 1,850. 1,850 is at 200 EMA, which is going to be a very crucial support for near term. Provided if it breaks, you can see some further downside movement up to 1,750, 1,700 odd levels. So it's quite important that, you can just trail your stop losses to 1,850. And if were it to bounce back from those support levels, you can see 1,950, 2,000 odd levels coming back again. Then just hold the stock, 1,850 trailing stop loss.
Okay. This next question is coming in from Rakesh, and it's a very small company that he's looking at. He's already bought, I believe, into this. Ward Wizard Innovation and Mobility is the name of the counter. It's currently trading just shy of that 80 rupee mark, and it's up as much as 7.4%. It is, I believe, a manufacturer of electronic small bikes, but not a very prominent player. Gaurang, if you don't have a fundamental view on this particular account, and I would completely understand if you don't, what would you buy from the perspective of two-wheelers in the EV space?
So two-wheeler EV, I think the first company that launched an electric vehicle, if my memory serves me right, was Hero MotoCorp. Then they kind of just, lagged a little bit on the backside, did not take it forward from there on. And then after that, we have likes of TVS Motors and Bajaj Auto, with the Legend getting relaunched, Bajaj Chetak, in form of EV two-wheeler scooter. So, and we have coverage on all these three names, to be very honest, Alex. Bajaj Auto, Hero MotoCorp, as well as TVS Motors.
Right, Gaurang, next one is a very interesting question. This one's from Kaji, and they're talking about Paytm. They want to know if they can take a contrarian view on this one. Now, we have already seen a regulatory action against Paytm. Vijay Shekhar Sharma has come out and said that there's no ED action yet against the company or himself. But would you suggest taking a contrarian view right now, considering the stock has dipped already quite a lot, 10% down today as well?
Who knows where the stop is, Smriti? To be very honest, it has fallen maybe 20, 20 and 10, but 50% is already down since the last couple of days and the news flows out. I don't recollect whether we have a coverage on Paytm or 190 communication. I would not want to put my neck out since I'm not sure about the coverage, whether you should buy, sell and own. But let me give you just two-pointer. First of all, it is sad that Mr. Sharma has landed himself in this position. This situation could have been easily avoided if they had compliance and ethics in place. Because these 2 points were missing, they are in a situation where they are. And I'm sorry to say that the kind of statements that the management is making, I think it is really surprising to me, and it doesn't go down well, honestly. So, and in a situation like this, when there is investigation and there are already statements made by the authority that by mid of Feb or end of Feb or early March, they are told them to wind up their maximum business, whatever they have. There is a lot of uncertainty. So, it's better that you kind of just be a little bit cautious with respect to your decisions, whether you want to invest or not. I will not give a clear-cut answer since we don't have coverage, according to my understanding.
Okay, fair point. I do want to throw this to you as well, Soni. Right now, there are no buyers in the stock, as evidenced by the fact that it's at lower circuit. But if you are holding, or if you are contemplating a contrarian view or a contrarian bet at this juncture because of the number of question marks that really don't have any answers, what should you bear in mind from a technical standpoint?
I think, Alex, from technical charts, it is actually quite weak and there are no such signs of any reversal as of yet. In fact, 440 was the support. It's just broken all supports that we can see. And there's a weak down, bearish biasness that it can even test 350 odd levels for the coming days. So one definitely should probably look forward to exit this stock and, from a portfolio perspective, can look for some other better stocks which can outperform. So I think it's wise from a technical perspective to just exit and avoid these stocks from current levels.
Fair point. All right. Soni as well as Gaurang, we have to slip into a very quick break. Viewers, we'll be back before you know it. Keep your questions ready. Welcome back. You're watching Ask Profit and we're in conversation with Gaurang Shah as well as Soni Patnaik. The next question that we're taking is from Mohit, and he's writing in from Ludhiana. He's asking about NMDC, which he's bought at levels of 136. He's also got 500 shares of NMDC Steel against the demerger, and he's got a time horizon of as much as 2 years. Gaurang, with these two, what should he do? Should he hold on?
So NMDC would be a whole recommendation from a long-term point of view on the fundamental side. And I think the entire sector, which is related to metals, ferrous, non-ferrous, I think the consumption demand is going to be there possibly after the elections are done and dusted and we have a decisive outcome as per everybody's expectations. So that's point number one. Point number two, flat and long product prices, we expect a slow and steady up north revision. And the input cost that was an overhang on the margins, percentage profitability, that's also reducing.
Right. Next one, we have a question from Tanya, and they're talking about Praj Industries. They say that the stock, their time period is around 6 months, and the stock has corrected a bit in the last 1 month. It has lost about 13% in trade. Soni, from a 6-month perspective, is it a good time to enter the stock?
I think, from current levels, I can see that there could be some more pain left and there could be a further downside dip up to 440 odd levels. That could be the turning point. So one can hold up to 440, 420 as a good support range. From a 6-month perspective, if that level is getting defended and it can bounce back, you can see again the targets coming off 520. So 520 is a resistance on technical charts. So the moment it has to cross again above 520 to see some further upside towards 600 odd levels, I think that can be the period. But definitely do hold as 420 stop loss for 6-month period.
Gaurang, very quickly, there was one mention in the interim budget of mandatory progressive blending of biogas with CNG. And I believe that Praj Industries has a play here. Is that something also to keep an eye on?
It will be. I won't comment on absolute clear buy sell alone or Praj, but Alex, I think this company has been in the entire alternative clean green fuel business for a pretty long period of time. And my sense is that government mandating blending of a particular percentage, whether it is with ethanol towards diesel and petrol or any other kind of alternative form, the capital investment has to be done for the incumbents to go and increase that percentage to a higher level. So it is in a niche business. Only thing is time is something that will be needed for companies to start blending as per the expectation.
Very old viewer of this program, Sagar, is writing in asking about Ramki Infra, which he's bought at sub 100 levels. It's not a stock, I think, that is widely covered. So I'm not sure if there is going to be a fundamental view, but I will still check. Ramki Infra, he's 8x Gaurang at this juncture. Any fundamental view?
Well, you invest in stock markets so that you can get 15-20%. When you get 8x, I think you only have to laugh your way to the bank, Alex. I'm not giving a straight out answer, but I'll just refer my earlier point. Once the election is done and dusted and a decisive government in this place, infrastructure activity is going to pick up even more. By the virtue of that, all the infrastructure related stories like PNC Infra, KNR Constructions, HG Infra and Engineering, all of them are likely to do very, very well. For this gentleman, I have no straight out answer since we don't cover Ramki Infra.
But Soni, on the technicals then, and he's saying that he's sitting on massive quantity. So not only will he be laughing his way to the bank, he's also got something to spare. So therefore, should he take some money off the table and celebrate this weekend?
Absolutely, Alex. I think from a technical perspective, all technicals will always, advise to book the profits and wait for a certain dip to re-enter or reinitiate your longs. Or even if if the gentleman is not willing to take the profits out, at least, keep a trailing stop losses to 750. That seems to be a very important support. If it's not breaking, it can definitely bounce back towards 850, 900 odd range. I think that can again be a level where you can book your final profits.
All right. Next up, we're talking about Trident. This one's from Shivansh. He wants to know if this is a good time to buy. Gaurang, if this is part of your coverage, do tell us if there are any targets for the stock as well.
Again, Smriti, we don't cover this stock, so I think Soni would be in a better position.
And anything in the textile space that you're constructive on?
So Vardhaman Textile is one, Raymond's is the other one that we are positive on. These are the two investment ideas.
All right. And Soni, on Trident, good time to buy the stock?
I think technically, from a very short-term perspective, 45 is the support. So even if you're buying at current levels, which is around 47.1, so keep a stop loss of 45 and max the target that we can see is 51. Above that, it can go to 53. So that these are the sort of targets from current levels.
Okay, I think we already kind of referred to this with Gaurang, so I'm just going to go to Soni, you on this one. KPI Green as well as Wari, both of these stocks have done incredibly well, particularly Wari in the recent past. Vamsi is asking, is this the right time to sell if you are holding right now?
I think, it's wise to just take your profits and, just from the Wari, I think it's better to just take your profits. There could be a resistance that can be seen coming ahead. Just wait for some dip, some minor correction of 5 to 6% to re-enter the longs in Wari. But talking about KPI Green, I think KPI Green is still looking like quite a strong buy even from current levels. So, maybe you could partake some of your portfolio to KPI Green instead. And there's a multiple support that can be seen in the level of 2000 to 1900 from a medium term perspective. So I think that stock can do fairly well. Keep your stop loss of 1900 and in a positional basis target can be 2400.
All right, that's all the time we have on this edition of Ask Profit. Thank you, Gaurang and Soni, for joining us and for answering so many questions for us. And viewers, we'll be back tomorrow, same time at 11:30 a.m. But stay tuned, lots more coming up on NDTV Profit.